All right, good afternoon, everybody. How are we doing today? Hope everybody had a great Thanksgiving holiday week last week. Enjoyed some time with friends and family. If I can get a quick audio and video check, just let me know that you can hear me and we're coming through loud and clear, that you can see my screen. Thank you, Scott. Appreciate that. And if you've been with us over the last several weeks here, we, excuse me, we've we've talked a little bit about some spreads, and we've talked a little about spreads versus binaries. And I told you last week on the webinar, I just briefly showed you, just kind of at the last few minutes of the webinar, kind of a strategy that I use, one of the many strategies I use with trading Nadex, and some ways it helps me determine, where is my target, how far do I think the market could potentially move, and some of the setups I'm looking for and some things I look at that help me determine, do I want to choose a binary, do I want to choose a spread. And I briefly just showed you the basics of a strategy that I'm going to kind of jump into a little more today. Some of you may have seen me talk about this strategy in the past. And then moving forward for the month of December, we're going to kind of start back over, the last couple of months here, we've talked a lot about spreads, and we're going to have kind of a binary focus December, starting with basics of binaries, choosing the right binaries, what are the different types of binaries, premium collection, kind of starting back over with some of the basics for those of you that may be joining us that are a little newer to Nadex. Okay, so what we're going to talk about today is trading key levels with Nadex binaries. Okay. See here, McLeese says, hello, I'm a novice, and thank you for starting with it. Yep, absolutely. So McLeese, today, if any of this, for any of you guys, if what we're covering today is a little over your head because you're not quite sure some of the things we're talking about or terms, just try to keep up. Don't let it overwhelm you, and just keep in mind that next week, in December here, we're going to kind of start over with the basics of binaries, and I'll show you here in a minute where you can go back and get some webinar recordings and just catch up on anything you want. Okay, so we'll leave no man behind here or woman behind here. We'll definitely give you a place where you can go for some great info. So thank you for joining us today. My name is John Skelton. I'm with apexinvesting.com, and the webinar today is brought to you and hosted by Nadex, so we appreciate them having us on here. Before we go any further, let's knock out our disclosures. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. These webinars for informational and educational purposes only. By the way, guys, if you ever on a webinar and you see me going to the Nadex demo platform and opening a ticket and entering an order, that is never trading advice. That's never a recommendation to buy or sell. That's simply me helping you visualize how to use that order ticket, how to use that platform, or helping you visualize what it is I'm teaching you. Okay? And as always, past performance not indicative of future results. So if you're brand new to Nadex, hop on over to Nadex.com. You can get some great information here. Nadex basically offers two different products: binary options and spread options, and you can get some great information on both of those here. We've talked a lot about spreads recently over the past weeks and months. Today we're going to be talking about binaries, although you can use this same strategy with spreads either way. Okay, a couple of you are saying, hey, I trade regular spot forex. This strategy I'm going to show you, works with any instrument, binary, spread, stocks, forex, futures. I personally love to trade it with Nadex because of the capped risk products, okay? And especially when it does come to, to forex with the spreads and binaries, I've got capped risk, protects me from any, lashbacks or flash crashes, stuff like that. Over here under trading platform, I want to bring your attention right here, demo trading platform. If you don't have one of these, get one right now. Sign up even right now on the webinar. I know most webinars you're on, people say, don't leave, don't look at anything, pay attention. Well, if you don't have a Nadex demo, sign up right now while I'm talking. Nadex will give you a $25,000 free demo account, all right? You just fill out some quick information, and log right in. It's a great place to, get some great information here about Nadex, get familiar with the platform, the different products they offer, how to enter and exit orders, and all kind of good stuff here. And a great place to practice new strategies and new systems. Work out any kinks in demo before you move over to live. So if you don't have a demo, definitely hop over and get one. Rangathon said he's having some type of issue signing up for that. Just give Nadex a call, and they'll walk you through and help get you set up there. Okay, so definitely take advantage of that. I've got to give Nadex a lot of props. They do a lot for their members. They have a lot of free tools, free demo accounts, and a ton of free education. If you go here to Learning Center, got all kind of videos and webinars. If you click webinars right here, a couple of cool things. Right here, if you click upcoming, you'll see all the upcoming webinars, okay? And you can register and get signed up for those. Here's my ugly mug right there. And like I said, December 6th, Nadex Binaries 101, okay? The week after, are you choosing the right binary for your strategy? So we're going to kind of start with, hey, I'm going to hold your hand, treat you like a 5-year-old, walk you through it like you've never heard of a binary, right? What is it? How do they work? Next, hey, there's a bunch of different ones. Do you understand the different types? Are you choosing the right one? And then a week later, we'll talk about a particular strategy with binaries, okay? And then we'll just kind of build from there. But you can sign up for these webinars, get reminder emails that they're coming, all right? If you want to catch up on anything, or for example, today's webinar, okay, Robert asked about, yes, the webinars are being recorded, okay? If you go to the same place here, instead of, you go under Learning Center webinars, instead of upcoming, just click on demand and click right down here, and you can find me right here, John Skelton with Apex. This will pull up all the recordings, okay? And today's recording will be there. Like I said, if anything today is a little over your head, you've got all kind of information in here. Last week, I talked about, should I trade binaries or spreads? Before that, we've talked about top mistakes of new traders. How do you transition from demo to live? News events, risk reward, basics. It's just a wealth of free information in here for you. So take advantage of it. And again, major props to Nadex for all of what they do for their members with tools and education. Okay, so like I said, my name is John Skelton. Oops, sorry guys. My name is John Skelton. I'm with ApexInvesting.com. Apex and Nadex, two different separate companies here, right? Nadex is an exchange. Apex, we're an online education company. We've got, strategy, systems, indicators, trade rooms. We've got over 20,000 members. We love the capitalist products of Nadex. I've been with Apex now for almost 5 years. I've got a background in banking and as a stockbroker, but we're traders just like you. I trade, even myself personally, I trade Nadex binaries and spreads every single day. And we're just here to give you some education on who and what is Nadex, what are some ways you can use it, what are some ways you could potentially, incorporate the Nadex products into your own trading, okay? So we're talking a little bit today about, like I said, I touched on this slightly on the last webinar. I want to show you just one of the many ways that I trade the Nadex products and how I particularly trade Nadex binaries at key levels and how I identify key levels and look for, some reversal points and kind of choosing the best binary for the strategy. I want to talk about that a little bit, okay? So, first of all, do not get overwhelmed by this chart, okay? You're like, what is all this? Don't even worry about all these extras, all right? These are all kind of just little different Apex, proprietary indicators here. But, some of you might have heard, and I'm sure you've all heard, the old saying of, chop is the killer. Choppy markets is what kills you. Or you talk to people that say, hey, I can trade in, trending markets, but I can't trade in choppy markets, it kills me. Or I try to trade in chop and, it kills me. You also might have heard, hey, generally speaking, the market really just moves in, you know, two different ways. You know, some people say, well, three, but, you know, point being is the market's either, you know, expanding, right? Or, you know, the market's consolidating. Expanding meaning it can be expanding up and being an uptrend. Expanding meaning it could be expanding down and being a downtrend. Or it's chopping or consolidating or squeezing together, right? And if you talk to most traders, they're like, I hate it. I hate when the market's squeezed like that. I hate when the market's choppy like that. I hate when it's range bound. Well, I understand what you mean by that, okay? Because you want to trade in big moves, right? But you really have to kind of step back, okay? And, you know, relook at the market. In fact, let me open up a different chart here as well. We kind of talked about this last week, but, you know, I look at that very differently, okay? Because what you have to do when it comes to not just trading Nadex, but trading in general, is you can't fight the market, right? Like you have to understand how the market works, how to read the market. If you fight the market, who do you think's going to win? I mean, it's a pretty simple answer, right? And I speak from personal experience, and when I was new, I thought I was some, you know, genius new guy that was going to figure out the thing that no one else has figured out, right? I'm going to beat this. No one else has figured this. I'm going to figure this out and figure out something new and something ridiculous, and I'm going to mix together 10 million indicators. I'm going to find something no one ever has, right? Raise your hand, say yes in the questions box. You've all been there, right? And you're all spent this time looking for this holy grail, and you're going to figure out something. We've all done it. And at some point you stop and realize, hey, I've got to, I can't do that, right? I've got to figure out how the market works and not fight the market, but go with the market, right? How does the market really work? Okay. And, you know, there was a time where I felt the same way. I hate chop. I hate market consolidations. I want these big moves. And I was always scared of chop, okay? Because I didn't want to trade going into it. And it wasn't until, you know, I really started looking at the markets on, you know, some different time frames and on some, you know, in a different ways that I realized I love chop. And chop is actually your friend if you understand how to use it, okay? To where don't be worried about trading into chop. Wait for chop to come and trade out of chop. And I talked about this a little bit last week, and I gave the example of you seen your kids go outside, turn on the water hose in the backyard, and what do? They kink the water hose, right? They kink it, and your water hose builds pressure, right? It builds up. And then when they unkink it, what does it do? It bursts out, okay? So I like to look at the market as kinks and bursts, okay? Because we talked about the market's either expanding, meaning it's going up or going down, or it's consolidating. Oftentimes what consolidation is, it's building. It's building of contracts, right? It's a building of contracts and a lot of volume inside, a lot of contracts in that consolidation zone, building up inventory to blast off, right? And sell that inventory higher or buy it back lower. It's like a build of energy. And then when that water hose is unleashed, that all breaks out with momentum, right? If you got your water hose kinked and you just lit it out just a little for a few drops to come out, it's not going to go very far, right? Everybody understand that? Your water hose is kinked, you barely lit it out where just a few drips dribble out. There's no momentum there, right? Kind of like a false breakout out of chop. But when you open that hose up, it just bursts, okay? Okay? Don says, hey, good analogy. But it's almost oversimplified, right? You think, oh, okay, great little story here, John. Great little sales pitch webinar here. Well, this is no sales pitch. Open a chart and look for yourself, okay? Look, okay, my chart finally came up here. Here's a YM chart, okay, which is the Dow. All right, now these are some special shadow continuum bars that are kind of Apex proprietary tools. To where, see, it says 2020 here. This is kind of a larger time frame chart. You know, the market, a bar, like the market has to go up 20 ticks to make an up close bar, or down 20 ticks to make a down close bar. So when you see a down close bar and then an up close bar, sorry, and then a down close bar and then an up close bar, what does that mean on this chart? Well, it means the market went down 20 ticks, then it went directly up 20 ticks, a little farther, and then down 20 ticks, and then up 20 ticks. That's 20 up, 20 down, 20 up, 20. That's chop. That's consolidation. That's a squeeze, right? So if I just go over here to my tools, and I look at, well, see right here is up, down, up, down. Then it popped up a little, up, down. Then it came back, down. And then down, up, down, up. That whole area right in here is consolidation, chop, right? When it breaks out of that, what does it do? Well, that may not look like a huge move to you, but these are 20 tick bars. So 20, 40, 60, 80, 100. Went up 100 points out of this squeeze consolidation area. You see that? What do we have down here? We have down here. You see it? And whether you're using a chart like this or tick bars or time-based bars, you can see some of these. These particular Apex bars just make it very easy for us to see because of the way they plot. You see it here? See the squeeze? Okay, and you understand why it's a squeeze, right? Up 20 and a little further and down 20 and down 20 and back up and then up. No, we're going to come down and then we're going to up and down and up. You can see it. It's not hard. Where's some more on this chart? What do you see right here? See it? Right there? And what do you have? A breakout of chop, pull back up to it, level of resistance, right? Boom. What did you get here? Well, these are 20 tick bars. 1, 2, 3, 4, 5, 6, 120 down. See it? Where's another one? Guys, open a chart. Like, this isn't rocket science. I'm not giving you some big pitch here. Just open a chart and you'll see it. Where's this one? We already saw it, right? Up, down. Where's it break out? 20, 40, 60, 80, 100, 120. Boom. See it? Then what? What do you have right here? A big area, right? Sometimes chop is just a line of bars, a smaller squeeze and a break. Sometimes it's 2 up, 2 down, 2 up, 4 down, 1 up, but it's all kind of on the same level. Does that make sense? Kind of like, imagine it like an elevator, right? Okay. This is like ground floor, right? The market comes up. This is ground floor right here. Let me draw a different box. Like, you see this? This is the ground floor, right? So the market comes up, 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 boom. And, you know, it went up this 20 and down this 20. Drops down a floor to the basement here. Drops some people off. See it? Drops some people off on this floor. See it? Comes back up to the ground floor. Picks up some more people. Let's go back and drop them off in the basement. Or stick in the basement for a while. Let's come back up to ground floor. Let's pop up to the second floor. Now back down to here. Now back. You kind of start to it make sense? You just see it. Sometimes chop is just one floor and then a burst. But sometimes it can be a little bit larger area, and then you got your breakout, right? And we can go through days and days of this, guys. Just open a chart. Michael, you can see it on other charts, okay? Michael asks, hey, does it show up as well on non-tick charts? I mean, you can see it on pretty much any chart if you learn to spot it, okay? I mean, you can see it on time-based charts. It's just out of all the different charts I've ever looked at, these particular apex bars, I'm not trying to sell you on apex bars. This is not a sales pitch webinar. It's an education webinar. I've just never seen it as clear, okay? Because of the way when it's like up, down, I can see it make a box. I can see it up, down, like a coil. You know what I mean? So I like having these charts up when I'm trading, like an easy glance. You know what I mean? Okay, I can spot that. Now I can go over, and I might not be trading off of this chart here, Michael. You know what I mean? I might not always be trading off this chart. I might be looking at this chart. I might have this chart, normally this is how I have it. I have this chart open to be able to be like, oh, okay, check it out. I can see this area, right? So what I'm going to do then is, you know, maybe like go down to a different time frame chart or a different like tick chart, okay? And I'm going to draw that box, okay? Like, let's just look at some. What ran? Okay, this is from a couple days ago, 11/26, right? So let's go to 11/26. Okay, so this is a little bit different type of tick chart here. See it? It's not quite as clear, right, Michael? Like it doesn't jump out at you the same on this chart. Or if like we opened a time base, it might not jump out to you the same, right? Okay. But, you know, if we're looking at them side by side, I can draw it out from the other chart to say, hey, well, that one area is actually right here. That other area is actually this right here. And that other area is this right here. See it here? Remember that area at the bottom that was up, down? Okay. It just looks a little different. You can learn to spot it on any chart. It's just real clear for me. But this smaller chart with some other indicators helps me. Okay. And I'll show you why here in just a second. And in fact, if you're kind of just looking at this chart a little bit, you can already see it. See this down here? Okay, we're going to talk about this in detail. Do you notice right here anything different compared to the red right here? Without even knowing what it is. Is it pretty clear there's a lot more here? Michael, you see that? Everyone else, you see that? You don't know what that is, but can you see it? What about over here? You notice anything about this green? Okay. See this green? You notice that it's a lot more green than you see in here? Yeah? Okay, so in here, you kind of see green and red. This is a volume indicator. It's not a regular volume indicator. I'll show it to you in a minute. Where was this at? All of this stuff. It was in the area of chop. When price breaks out of the chop, what do you see? Boom, 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 boom. What do you see building? Do you see, okay, what about over here? In the box, where do you see the volume levels compared to boom on the breakout? See it? Right? What do you see out of this box as it's starting to break the box here. Boom. Do you see a kink? Yep. Kink, kink, kink. Do you see a slight little dribble? Or do you see I unkinked it and it burst with momentum? I unkinked it and it burst with momentum. Do you see it? I mean, we can go, I'm not cherry picking. We can go through any days you want here. I mean, it's just, they're all over the place because that's how the market works. Open a chart yourself, go through any days you want, okay? They might be smaller, they might be bigger, but you've got kinks and burst, right? This is the next day. You've got what? Some kinks in here and burst, right? Sometimes you might have larger areas of kinks as well, and then big bursts, right? You have to take a little time to learn to spot them. What'd you have? Was this yesterday? What do you got in here? Kinks, bursts, right? What do you got in here? Kink, 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 right? All kinds of kinks, breaks out, right? What do you have later? Smaller kink, burst. See it? Sometimes they're big, sometimes they're small. I mean, what do you got there? Kink, burst. What do you got here today? Some kinks up in here, some bursts down. It might not always be 100 pips. You know what I mean? Some might only get you a little bit. But you'll see that that's how the market works. Okay? Does that make sense? I went a lot longer there than I thought. Okay? One other quick thing. Notice back here, that first day we looked at. Okay? What are we close by here on a lot of these? Do you see these levels on the chart here? Settlement, half a deviation, 0.7 deviation, 1 deviation. Notice that we're close to important levels at these breakouts. We're on a level right here at the chop. We're at a level right here at the chop. Okay? And you'll see a lot of times, you'll see a lot of those consolidation areas around these big levels. See it here? Level. See it here? Level. Whether you're using support and resistance levels, deviation levels, fib level, whatever it is, okay? The name of this webinar was Trading, markets at key levels. What I like to see is the market close to a level, a key strong level. Like I said, deviation, support, resistance, fib, whatever you're using, okay? And I don't want just oh, look, it got to that level and I had a reversal bar. I had a down close bar. Well, let's put our live money and go short. How many of you done that and how many of you regretted that? Right? I want a little more than that. Okay? I'm not saying that there's not trades available with that type of situation, but check out this. Now look at this chart. Okay? Well, okay, let's talk about this indicator. This is a Apex proprietary indicator. This is a volume style indicator. The green bars are up close, the down bars are red close, very simple. This is not your standard VOL or volume indicator. This indicator is not measuring the volume within that individual bar. A volume indicator just measures volume in the bar. It's measuring the accumulated volume in the trend. Okay? It's building a volume. Okay? All these green bars, see here where it turned back to green when this turned green? Okay? It's like it's an accumulation of trend volume. Okay? Showing you the strength of the push. The strength of the push, not just the strength of one bar that might be some wacky, random, crazy bar, okay? You want to see the overall strength of the bar, of the push, okay? And it can show you a lot. I mean, look here at this uptrend, and you see, you know, this push up, and then a little bigger push up, a little bigger push up, and have a little trouble, boom, big push, and then what happens? Kind of helps you see a little bit of potential exhaustion there of like that last push. Or you might can see exhaustion the other way if it's pushing and it's losing strength and just very little, and then we go back the other way. Okay, so that's what this volume indicator is. So if I see the market coming to a key level, then what do I look for there? I want to see the consolidation. I want to see the market choppy. See how it's close to this settlement level right here? Okay, and we've got another level right here, and then the market does what? It's coming up, and then it's just chopping in here. See it? Okay, so at a strong level, the water hose is kinking. So should I be that guy going, oh, I hate chop. I hate when the market consolidates like this. I hate it. Or should you be saying, oh boy, here we go. Here's a kink. My job is not to get caught in the kink. My job is to be looking for the break, right? The unkink of the hose. Joseph, before the end, I'll show you where the recording will be, okay? So how many of you have tried to trade chop breakouts before and you got hit because of fake breakouts? We've all done it, right? I mean, look here. Like we're in chop, it's kind of coming down, and right here it breaks out of the box, right? See it? It finally breaks out of the box right here. So you put in an order short right here to go short. You're all excited. And what does the market do? It comes down a couple of bars and goes against you, knocks you out. Raise your hand. You've all had it happen, right? Well, let's take a look at something here. Inside this chop box, what was the volume accumulation doing? Well, in this push down, the volume accumulation came all the way to right here, right? See that? In this push down, it was even a little less. This push down, not much. This push down here that broke it, see it? As it broke the box right here, as it was breaking out of the consolidation box, was there any more accumulated volume here than there was back here on the failure? And there's even less than there was here. Do you see it? I mean, without taking a 4-hour course, can you kind of see that in front of your face? That every push to the downside only had this little bit of volume. So when it comes out of that box, are you seeing any extra volume here? So we know the hose is kinked, right? Everybody can see the hose is kinked. Did you lit off a little bit and it's dribbling out the hose here? Or did you unleash it and it's got momentum, bursting? Which one is it right there? The answer is pretty clear. It's a little dribble, right? You see it? Look at this next screenshot. Same chart, just a little while later. Remember? See it? This is our chop box. Kind of breaking out of here. No momentum. But you took it short here, fake break, and it didn't give anything. What it did, it turned around. And look when it turned around and got back up here, breaking the top of the box. Inside the box, inside the kink, look at the pushes to the upside. See, the blue is the upside. Blue, blue. What do you see here? Build, 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 build. And as it's breaking out, what do you see? Is it a pretty clear difference that one of these was a dribble of the hose that had no momentum, and here the hose got unkinked, and where did it go? Without a 5-hour, 4-hour training course, do you see that pretty clear in front of your face? We're 30 minutes into this webinar. I've drawn you some boxes and showed you this example. Does that make sense right there? Like, to the everyday person, you don't have to tilt your head to the side and, well, I don't know. It's kind of right there, right? You don't need a PhD or some guru trader, right? It makes perfect sense. So how would I trade this if I was trading Nadex? Well, obviously I could, hey, when it breaks here and volume's confirmed, the bar that breaks it, I want to enter, a few ticks above that to go long. I could have entered a Nadex spread there, no problem. But we're talking about Nadex binaries. So how could I have traded this with a Nadex binary? Well, a couple different ways, right? I mean, I could have got, if the market's right here at the time of the break, I could do a at the money binary, which means I'd be buying for about 50. And at expiration, it's either worth what? 0 or 100, right? Okay, well, no problem. I mean, this trade happened right around 11 o'clock. I could have done a 20-minute binary that expired at 11:20. I could have looked for a 12 o'clock expiration, bought here at 50, wanting it to expire over here at noon, worth 100. Could have done that. I could have looked at an in the money binary and bought down here at about like $75, right? Give myself a little bit of room, to let the market just stay above this level. If you're not sure what some of these are, guys, you can catch up on the webinars, or in 2 weeks, I'm going to break down in the money, at the money, and out of the money binaries for you. Out of the money binary. What is an out of the money binary? Well, an out of the money binary is just, real quick. We're not going to get detailed, but an out of the money binary would be something like this, where it's up here priced at, let's say, $20. Okay. Well, where's that strike at? 25,355. 25,355. Well, if we look at a chart, okay, like currently, 25,355 is like way up here, right? Whoop. Market's way down here, So if I'm going to be looking to buy something out of, low risk like that way up there, I need to have a reason to think it's going to go up there, right? I mean, first of all, my first reason is, well, we've got a kink and I'm seeing a burst. I'm expecting a burst. But what's the other thing I would want to look at if I'm going to do an out of the money binary, or if I'm going to do a spread even? Where would I potentially want to exit? If I've got this big chop box right here, a break of momentum at this key level, I'm breaking out here, where is the real first place on my chart that kind of stands out of, hey, this is potentially the area it could go, and this is also the potential first area that it might hit some resistance. What is the next big level? Right up here, this half deviation level, this next big support resistance level, right? Now, I didn't catch this whole screenshot to see it go all the way up there, but that's where I would be targeting, right? Does that make sense as an expectation of potentially where I might be looking for it to go? And therefore, if I'm going to do an out of the money binary, I probably would not want to do an out of the money binary that's above that level. In fact, I'd probably want it to be a little below that level. Does that make sense of why I would do that? Like if I'm going to do an out of the money binary, don't get it way up here past the next strong level. Get it down here where it makes sense that the market could get to that strike level. Okay? Let's look at another quick example here. Same thing. We're right here around this, deviation level. The market is chopping, right? Market's chopping. We see, the pushes up in volume, down in volume, up and down. Now look right here. The volume did break. This volume here was higher volume than these other down pushes. But look, it didn't break out of the box. See that? But here, when it is breaking the box, what do you see? The volume building, right? And the volume getting bigger than it was back here. And you see the breakdown. Okay? Same type of situation. I could have traded this with an in the money binary up here selling, an at the money binary right here, or an out of the money binary. Okay? One of my favorite ways to trade it is with out of the money binaries, where I'm seeing a target like that, and I'm getting in, around say $30 risk, and then I'm doing a 1-to-1 risk reward ratio, meaning I'm buying for 30, and as the market's shooting down and that value gets up to about 60, so I've doubled my money, then I want to get out. I'm not holding them all the way to expiration. I'm looking for a kink, a burst, double my money, get out, move on to the next one. Okay, so that is one of many ways, but my favorite way to trade Nadex spreads, but particularly binaries at key levels. Does that make sense to everyone? A lot of times, especially new traders, you're trying to find fib levels and support and resistance levels, and you're looking for the market to hit that level and just make one little bounce off of it, and you're going to go short. I wanted to see it get around a level, and I want to see that chop. I want to see that water hose kink. Or I want to see it bouncing in between a couple levels, and then kink. I mean, let's see. Okay, here. See, this is the 7.7 and 0.5 depth, see? And just kinking right on that, bouncing off that, kinking right on that, and then break out. See up here, where's that kink at? The 1.5 deviation level. Down here, where is it? Right at settlement. Where is it here? It's the half deviation level. Here, it's right under settlement. Okay? Now, yes, sometimes as the market goes straight to a level and bounce right off, sure. But I want the highest probability setup. That's going to get me the highest probability move, which is going to be level, kink in the hose, and then a break. But not just a break. Because I don't want the dribble break, right? I want the fully unleashed hose that's shooting across the yard momentum. I want to go with the momentum. Do I want to be the guy that waits for the momentum to happen, boom, and then buy at the top? Or do I want to be able to spot the kink in the hose, have a tool to see the break coming, and get in it with a very low risk? And guys, after this webinar, open a chart, whatever kind of chart you use. Look at some bigger time frames too. If you normally trade on like a 1 or 5 minute chart, look at a 15, look at a 60, look at different times, and start drawing these boxes. Start seeing that is really how the market works. You can spot it all over. It's kinks and bursts. It's accumulation of contracts, distribution of contracts. Accumulation of contracts, distribution of contracts. Right? Okay? So guys, was this webinar helpful at all of giving you a couple things? For one, how to trade Nadex binaries at key levels. Well, that is one of the things you look for. For two, just a very simple way to look at the markets. Okay. You've all watched 10 billion videos of this indicator average that crosses this, and this one turns green, and this one has to go this way, and this has to do that. Stop and just look at the market and look at Kinks Burst, Kinks Burst. Simplify it to yourself and look at the price action. Okay? Everybody always talks about, I want to follow the big boys. I want to follow the big institution. Well, what do you think they're doing in these choppy times? Or in fake breaks of people go this way and we're going to grab all those contracts, and this, and we're going to grab all those contracts. They're building up an inventory to go out and sell it. And do you think individual traders like you and me are making these kind of volumes happen? I mean, seriously, do you really think me and you are making these kind of volumes happen in a market? And these kind of accumulation happen in a market? Just us. Do you think we all get on a phone call together and say, hey guys, we're chopping here. Let's all start buying. A handful of us, we'll move this market. Do you think we're doing that? Or do you think they're doing that? Right? And if you want to follow that, do you want to get in at the top after everyone else has followed it? Or do you want to spot, level, kink, here comes the burst, get in low risk, ride it out with those boys, get out? Okay. Robert, thank you very much. Robert says very good. Thank you. I hope this was a little bit of an eye-opener, not just about Nadex binaries or not just about levels, but the market in general. Like, I challenge you, don't take my word for this. Go open some charts, start drawing some boxes. Okay. Scott, I know that there's some regular volume indicators out there that show you each bar. Okay, that you can see some of this on. It's not quite the same as what I'm this Apex indicator here that I'm showing you, the VAD indicator. We call it VAD, V-A-D. It's called volume accumulation and distribution. Like we talked about in here, the accumulation, and then boom, the distribution. It's kind of a proprietary indicator. If you want to get some more information on it, feel free to come over and visit us at apexinvesting.com. You can ask us any questions over there as well. And then someone asked, Joseph, if you hop on over, Joseph, if you go to Nadex.com, okay, and you go right here to Learning Center, then you click Webinars, right here on demand, and then right here just find me, John Skelton. This is all the recordings. That's where this webinar will be, probably later today, worst case tomorrow, if you need to go back and catch up. Okay. I believe, Joseph, that was you that asked that, right? Yes. Where will the webinar be? Okay. Let's see here. Rangathon, you asked about volume on FX. We use the volume for the forex futures. Okay. So with forex, I trade this the same way, but our indicator is using the futures volume. Okay. All right, guys. Well, guys, I hope that helps you. I hope that gives you, I hope you're kind of excited, like to get off this webinar and go look at some charts and draw boxes. All right, look at some multiple time frames, look at some multiple tick size, and when you see it on one, draw it on the other, watch for these breaks, look at your levels, start piecing this together, and then start testing it in your demo account, your Nadex demo. All right, and unclog your mind about 10 billion crossing this and this indicator and that indicator. And imagine if you go back to your first day ever of learning about trading. Would you rather have watched the hundreds of hours of random videos about this indicator and that indicator and this cross and that cross and this formation and that for? I wish I could go back to when I first started and somebody gave me the water hose analogy and taught me from day one to draw boxes. You know what I mean? Like if I could start there. Or think about it like this. If your best friend or your brother said, hey, that trading thing you're doing, I want to get into it. Where should I go? Would you send them to YouTube to start watching 10 billion random cross this, cross that, draw million indicators? Or would you say, hey, you know what? If you're starting from scratch, learn this. Start here. I wish I would have started here. So go check it out. Okay. Michael, you don't need any account to go see videos. You just hop on to Nadex.com. You don't have to log into anything. Just go straight to Nadex.com, Learning Center, webinars. You don't need any type of account to watch the videos. Okay. All right, guys, make sure to get signed up for next week's webinar. We're going to start at the very basic of Nadex Binaries 101 and get signed up for those, get registered. You'll get reminder emails. Again, if you have any questions, feel free to hop on over and visit us at apexinvesting.com. Thank you so much for your time today. I appreciate it. Hope this was helpful. We will see you next week. Have a great one, guys.